Hey, I am really excited today. It's unusual in these episodes that I get to share strategies that benefit both buyers and sellers at the same time, and that's what I'm going to do today. So, what I want to talk about is mindset and strategies. So, for starters, the mindset of most sellers, and the thing that I want us to really focus on as a seller today is how do I net the most amount of money when I sell my home, right? If you think about it, we often get very caught up in the compensation we're offering the agents. But the reality is you don't care about that. You want to walk away with the most amount of money possible. So if you walk away with $1 million, but you've offered discounts to your agents, that's one pile of money over here. But if you were to walk away with $1.1 million, but you offered, 10% to your agents, would you care? Sure, you'd be happier offering the higher compensation and netting the most amount of money. On the other side, for a buyer, again, mindset, the focus of most buyers is lower monthly payments or lower out-of-pocket costs. So that's going to be the focus for today as well. As you're looking at the discussion we're having, keep those lenses in mind. So there are really two things I'm going to focus on today. The first one is compensation to the buyer's agents. And although there's never been a requirement, sellers have usually offered the buyer's agent, call it 2.5% to 3% compensation. In fact, when I sold my house, my personal house, in a slower market, I actually offered the buyer's agent 3.5% compensation. Everybody around me thought I was crazy, but I netted at least $50,000 more because of it. It drove more interest. The agent was able to offer some of his compensation to the buyer. So it worked out for everybody. And what's going to happen going forward is if compensation is not offered, the buyer will likely ask for it in the offer anyway. So keep that in mind as a seller and also as a buyer, knowing that that's an option for you as well. Now, the second piece I want to talk about today are rate buy downs. I've mentioned this on several videos in the past, and I want to break it out a little bit more carefully and a little bit more detail today. So think of a rate buy down. So these are not the points that we're all familiar with that is over the 30 years of your loan. These are short-term rate buy downs. And I want you to really think of it as a partnership between both the buyer and the seller. The buyer benefits because they're able to pay lower monthly fees, and the seller benefits because they're going to walk away with more money and sell their property quicker. So in the example that I have here, this is a more unusual program, but it's called a 3-2-1 buy down. So it's over 3 years. Most buy downs are 2-1. Not all banks offer this. So reach out to me if you want some referrals about banks that do offer these programs. So in this example, and this is a $500,000 purchase, at an interest rate of 7%, which is roughly where we are right now, the monthly payment would be $26.61. Okay, that's what everybody else would be paying. However, if it's a 3-2-1 buy down, first of all, the seller is the one who's paying the cost. And so the purchase price will likely be higher to offset that. However, what's going to happen in this scenario is the first year, the rates are actually 3% below the market rate. So instead of paying 7%, you're paying 4% interest rate for the first year. So instead of $26.61, your payment would be $19.10. You'd be saving over $750 a month. Year two, it goes up to 5%, and you'd still be saving over $500 a month. And year three is $23.98, and you're saving over $250 at that point. After that, it just goes to 7% and stays there. So the expense in this case to the seller is a little over $18,000. So what often happens in this scenario is the buyer will offer $18,000 more to offset this. The seller nets the same amount, but the buyer is able to get in and afford a home that they may not be able to. And the goal with these buy down programs is that sometime, in this case, in the next 3 years, the buyer will be able to refinance into a lower rate and lock that, and then just put this behind them. So anyway, I hope this gave you some good insight. If you want to play through some scenarios about your own situation, either as a seller offering this to a buyer or as a buyer considering a rate buy down, reach out to me. Or if you just want to talk about your individual situation, definitely give me a call. Look forward to speaking soon. Thanks.